Good morning. Thanks for having me.
Looking bright and early. Let's start from the currency, which is the barometer of everything else we're discussing. It boils down to the currencies market. Yes or no?
Yes.
Yes. So next week is the key decision time for the MPC. What's the consensus, as it were, right now as to how the central bank is expected to move to work with the new Petrol regime?
Yes. Thank you for that. Based on the new development that we've seen within the oil and gas space, we expect that the CBN will also make a move to complement the efforts of the Minister for State of Petroleum, or even the federal government, regarding the move to partially deregulate the oil and gas space. We feel that the CBN needs to try and bring back the interbank market, where individuals, the banks, and even autonomous sources will be able to come and sell at the prevailing market rate. This will help increase the inflow of foreign currency to the economy. You would see that based on the analysis and based on the projection, the 285 naira to a dollar that's been used in converting to arriving at the 145 naira petrol price. This buttresses the fact that there needs to be an adjustment. There needs to be an adjustment to the naira. We can't continue to play the ostrich game while we continue to maintain 199 naira at the CBN rate, while the parallel market, which continues to go for 320 naira to a dollar. So we expect that even maybe before the MPC meeting, because most of the decisions that have been taken in the past around the foreign exchange market have not been taken at the MPC meeting. So it may either be or after the MPC meeting, come up with policies to review their stance regarding removing restrictions that have initially been placed around the market. So we feel that this needs to be taken as soon as possible, so that what we tend to suffer, what we tend to lose if we continue to delay is much more than what we'll suffer now if we take this decision and bite the bullet.
Everybody's talking about biting the bullet today. So it's all now before the central bank. But let's look at how the debt markets would pace out this week. We've heard from the stock market last week. That was a resounding yes, as far as the equity side was concerned. Look at the debt market for us. They got their own inflation worries. Well, April data in today, 13.7% from the MBS. We're looking at what May inflation will look like, and likely interest rate hike by the central bank, seeing that inflation is now at a runaway level, and you've got to do something with the key interest rate. Talk us through this, Ayo.
Yes, thank you. The bearish sentiment persisted throughout last week, and you also will notice at the debt management auction for the month of May, you will discover the quotes, the rates that were quoted at that market were range between 10 and 18%, which shows the expectation of an increase in interest rates in the medium term. So we expect that the bearish sentiment will persist. Even when you look at the auction, most of the bids were not filled. About just 77% of the total bids were filled. So we expect that interest rates would yields within the fixed income market would still trend upwards based on expectation. With the recent inflation data that have just been published, 13.7% for April, and you expect that there will be also a significant increase in inflation in May. This would also dovetail into interest rate yield expectation, and as a result, people will try to reduce their position to reposition into higher yield instruments, so that they try to minimize their reinvestment risk within the short term.
Yeah, there's no way we will talk about the new Petrol regime, the currency issues, without the banks. So the banks were exposed to the downstream, upstream sector here and what have you. So What's your outlook on the banking sector? Last week it was, yes, looks really good. The banking sector were part of the major leaders of the market. Do you think that this new petrol pricing regime, the petrol partial deregulation, is already feeding positively into the commercial banks' shares on the market?
Yes, for us, we don't think it's just the development within the oil and gas space that led to the rally we've seen. You will discover that a week before now, the budget was also signed, and we feel this will also help open up opportunities for the banks to lend. The banks will try to also support the government in terms of trying to focus on particular sectors they wish to focus and grow within this year. So that would open up lending opportunities for the banks, which have had muted growth in the past quarters. Regarding the oil and gas space, for downstream, for banks that are really exposed to the downstream space, we will expect that there will be increased activities because the banks will also be willing to lend to them because the lag between when you claim your subsidy has been removed. So they'll be able to calculate the cash cycle. They'll be able to determine when their cash will come in if they lend to any of the investors within that space. So that's also assisted a bit. But we also feel that in terms of projection regarding the foreign exchange market also contributed to the significant growth we experienced within the banking space on Friday. For local investors who are not exposed to any foreign exchange risk, I think the early bet positioning contributed to the significant rally we had overall within the equities market on Friday.
Okay, we have a brand new business and markets weeks to deal with. Thank you very much, Ayodeji, head of research at Afrinvest. We appreciate your weighing in on the conversation today.